Okay, yeah, okay, let's get started. Okay, so for tonight's webinar, right, it's presented to you by Global Market Night Desk. My name is Yong Heng, and with me we have YJ here. Okay, so what we'll be covering tonight is US options, mainly covered calls. Okay, so I will be going through, these are the sections that I'll be going through. I will be covering what is a covered call. Okay, then on why people use covered call, and also when using covered call, right, the one grid to take note of, okay, is theta. So I will go into in depth with that, and I also go through with you the covered call that trade, the entire trade life cycle. Okay, then I also go through with you Poem's platform for options, and also the brokerage and what are some of the counters that is available for trading options. Okay, then after that, I will pass on the time to YJ, which will be going through some of the counters review, TA sections, mainly specifically for Magnificent 7, the Max 7 charts. So he will be going through some of the key levels that you should be looking out for when you're doing your cover calls. So those are the strike prices that you can be selling the call. Okay, so let's get started. Okay, so first of all, I will be going through what is a call options. All right, so a call options, right, is generally an call options that is allowing the buyer, okay, to actually buy the underlying shares at the strike price before the expiry date. Okay, so when you're long a cover call, you are saying you're said to be bullish. Okay, so you want the stocks to actually go up. So on the flip side is actually the seller of the call options. So this is the thing that will be focusing on. So selling a call is, if you have the underlying stocks, will be a cover call. Okay, so as opposed to a long call, a short call is actually writing the call, that means selling the call. Then if the buyer actually were to exercise the right, you as the seller will have to actually deliver the underlying shares, okay, at the strike price. Hold on, so sorry. Okay, yep. So that is what a call option is. So a covered call, what's the difference between a covered, or rather what is actually a covered call? A covered call without any jargons or explanation is actually just a short call. All right, so you can see here number 2, short call, and with the underlying stocks. Okay, so in the sense that you are covered. Okay, so this is actually very important as opposed to actually just selling the call outright without having the underlying shares. Okay, so a cover call is said to be a very low risk strategy as compared to a naked call. Okay, you may actually ask what's the difference. When you short a call, okay, you short a call, then let's say the buyer were to exercise, you will have to deliver the underlying share at the strike price. Okay, so the risk comes in when you are not holding on to the underlying share. Take for example, Apple. You short a Apple call option contract at the strike price of, let's say, $200. Okay, then let's say for whatever reason Apple release earnings that is actually much better than expected. The share price went up. Let's say hypothetically it went up to $300. If you are not holding on to the underlying shares, but the buyer were to exercise the right, then you will have to deliver the Apple shares. But then you are not holding on to any Apple shares. So you will have to buy from the market Apple shares at $300 to deliver it at your strike price at $200. So this is the risk we are talking about. Technically, a naked call options is actually you have unlimited risk because the share price technically can go up to infinity. Okay, but if you are holding on to the underlying shares, you are not afraid if the buyer were to exercise the right, because you are holding on to the share. You can just deliver the share from your account. Okay, so that's the difference between cover call and also a naked call. So what are some of the benefits of a cover call? Okay, just now as I mentioned, a cover call is actually a very low risk strategy. So it just entails you selling the cover call, then you just get the premium from it. Okay, so the beauty of a cover call is that you can keep doing this. Once you sell a call option this week, expiry for this week, after it expires, you can continue to roll forward the contract, sell the contract for another expiry date. In the sense that you can actually generate premium this way. So this is particularly useful for those stocks that is not paying out dividend. Okay, for example, your Tesla shares. Okay, Tesla shares, when you're holding on to Tesla shares, the only way you can get return from it is capital appreciation. That means the share goes up. But then utilizing Tesla shares and doing a cover call, you can actually earn premium on it. So this leads me to my third point, enhancing your returns. Okay, so capital appreciation, if combined with a cover call, it can actually help you to increase your return on your portfolio. Okay, and also this there's another beauty, there's another benefit of a cover call is actually help to lower your average price. Why do I say that? Okay, let's say you bought your underlying share, for example, Tesla at a certain price. Okay, if you continue to do this, that means you continue to sell a cover call and without getting the shares assigned. This cover call, the premium, can actually help you lower down your average price per underlying shares. So in a sense, this helps you to lower down your average price. Okay, and also everybody says options is a wasting asset. Okay, because of the time value that is built into it. Your option, if you're long option, your option value just decreases with time. That is if you're long option. Okay, if you are selling a call, that means you're on the short side. The time value actually works in your favor. With each passing day, okay, your value of the option contract actually decrease. Okay, but then because you are short option, you can actually buy back at the lower price. So you are actually leveraging on the wasting aspect of the option. Okay, this wasting aspect of an option, right, comes in the form of a theta. Okay, theta is what we so call a Greek option. Okay, with the time value of money. Okay, last but not least, cover call can be used as an exit strategy. For example, you are holding on to any of the shares like Tesla, Apple, or those, then you bought way back 5 years ago. Then you can actually use this cover call as an exit strategy, which is your take profit level. That means, for example, Apple, I will quote Apple again. Let's say you want to sell Apple at $200. If you don't utilize options, okay, the only way you can sell Apple share is you sell it at market with a limit price of $200. Okay, but then in between this period, before Apple goes up to $200, you're not earning anything. Okay, but with a cover call, you can actually sell a cover call at a strike price of $200. You gain premium from it. At the same time, once Apple hits $200, and if the buyer decides to exercise, you are actually selling your Apple shares at $200. It's a win-win situation. You get to take profit from your Apple shares and also a cover call, the premium generation. Okay, so these are the main reasons why people actually trade cover call. So just now I mentioned Greek. Okay, so I'm not saying the other Greeks, like for example, your delta, your gamma are not important when you trade options. Okay, but specifically for cover calls, people usually focus on theta. Theta is your time value of money. So how do you read this theta? Okay, for example, you go to the option chains on Poems. Okay, the option chain where they actually show a page of option strike prices. You scroll to the right there. There is one column called theta. Theta is actually the time value of money. So for example, if you see on the option chain itself, it has a theta of 0.9. So what does this mean? Okay, so this means that with each passing day, the value of a call option decreased by $0.9 per day. So that's actually the time value of money. So for example, I were to sell let's say a call option today, Monday. Okay. If market is flat, doesn't move anything, Tuesday, the call option actually decreased by $0.9. Okay. So that is actually your time value gain from the option contract or the call option contract. Okay, so when you sell cover call, so one of the questions that some of the people may actually ask, there's so many strike prices, there's so many expiration date, which one should I choose? Okay, the strike prices, right? Later what you're going, based on the technical analysis, right? Some of the key levels to look out for, then you can actually sell your cover call at that level. Then to answer another question is which expiration date you should be selling the call option contract at. Okay, as a rule of thumb, the time value of money the time value of a call option, right? Theta gets more pronounced between 60 day and 0 day to expiration. So when the option has less than 30 days to expiration, the time decay is actually faster. So as a rule of thumb, you shouldn't be selling your cover call more than 2 months out, 3 months out. Okay. As best as possible, you want to leverage on the time value of money, the time value of the time decay. So sell your options lesser than 2 months. Okay. In that way, right, you can actually see from the chart here, below 60 days, you can see the time decay is much faster as compared to longer than 60 days. So the difference here comes in the sense that, let's say, for example, someone actually sell a cover call with 1 year to expiration date, okay? As compared to another person that is actually selling 2 years, not 2 years, sorry, 2 months cover call, okay? The person that is actually selling a 1 year cover call will have to sit on it without any time value decay. I wouldn't say without any time value decay. The time decay actually slows, is actually very slow. Whereas compared to another person that actually sells it for 2 months, which each passing day, right, they can actually sell they can actually see the core value get lesser and lesser much faster. So in that way, right, you can actually leverage on the time wasting asset of it and buy back the contract if it's much cheaper than what actually you sell at. Okay, so this is actually the chart that actually shows the theta of the Greek. Okay, here, so I will be going through a trade example. Okay, so let's say a cover call, right? When you enter a cover call, it means that you are holding on to the underlying asset. So what can you do? You can actually sell a cover call, okay, at a certain strike price and certain expiration date. Just now I mentioned less than 2 months, which is good, okay, it's good enough. So there's two potential outcomes. Ignore the arrow here. The second part should be a B, okay. So there's two potential outcomes when you enter into a cover call. First is the stock price fall below the strike price. In this way, right, there's no value to the call option. So there won't be any assignment. It won't be asked by the buyer to actually deliver the underlying shares. So in this way, you actually get to keep the entire premium. Okay. Then after the option expires, or you decide to close it at a lower price, you can actually roll forward. You can actually sell another cover call for another expiration date. Okay. This is one of the outcome. The second outcome is if the stock price trades above the strike price. In this way, right, if you don't close it off, your short call, and if the buyer decides to exercise against you, you are obligated to deliver the underlying shares at the strike price. Okay, this one, right, you will be selling the underlying shares at the strike price. Is different from outcome A, which you actually get to keep the shares. Okay, then you can go forward the contract. But this one, right, you will have to deliver the share. So some of the questions that I got is I want to keep the share, or I don't want to be assigned. Okay. If you don't want to be assigned, what can you do is you can actually buy back the call option, but more often than not, there will be a loss. Okay, because the call option, if the underlying strike price increase in price, if the underlying shares increase in price, your call option actually gets more valuable. Then you have to buy back a higher price. Okay. So some of the questions that I got asked is what can I do? What I can do is you can actually let the shares get assigned. Okay. That means you deliver the shares. Then buy back at the later time when the shares, when the stock actually trades back down. Okay. Shares doesn't trade one single line out. It's not linear. So there's actually sometimes when it traces back, right, you can actually buy back the lower price. So not to worry about that. Okay. So this one is actually scenario A. You can actually see the trade cycle here. So you just buy to open. You sell to open. Okay. By expiration date, if the underlying shares trades below the strike price, the entire option is worthless. It just expires worthless. So what can you do? Just now I mentioned you can go forward a contract, or you can open another short call. Okay, this is scenario B. Scenario B, at expiration date, if the underlying share trades above the strike price, then you are obligated to sell the share at the strike price. Okay, so in this way, you will be delivering the underlying shares. Okay, so just now I mentioned there are two things you can do. One, you buy back to close the contract. The other one, you just wait for the shares to trade back down again, retrace, then you buy back again. Then after which you can do another cover call. So this is actually the payoff chart. I wouldn't go into much details here. So it just highlighted here scenario 1 and scenario 2. Okay. So scenario 2 is when you do a cover call, right? Your upside is actually limited by the strike price. So whatever you gain, the maximum of it is the strike price plus the whatever premium you got from it. So scenario A is by expiration date, if the underlying share trades below the strike price, right? The option just expire. Okay. Okay, so that's all for cover call. So right now, I will just be going through some of the brokerage details or how points actually charge for trading options. Okay, So we are charging, I wouldn't say it's the cheapest rate in the market. Okay, it's actually competitive. Okay, it's 0.88 per contract, minimum per order 2.88. Then the others are just as per the pass-through fees, what the exchange charges for trading options. Then sorry. Take note for exercise and assignment, right? Police actually charge $2 per exercise. So in the event if your cover call get assigned, right, that you will be charged a $2. Okay. So yeah, so right now, Points offers options trading through Points web and Points mobile trade. So these are some of the details here. Live price subscription later I'll be going through is available for subscription free of charge on Points web. Okay. The trading hours will follow the US regular trading hour. Okay. Take note, right, for option trading, right, the option contracts settles T+1 as compared to stocks. Stock settles T+2. Okay. So, but do take note that when you are assigned the call option contract, meaning you have to deliver the share, that one is actually a delivery of shares. So that one will actually follow the normal share settlement cycle 2+2. Option settle T+1. This one is different. Okay. So, below here, you can actually see this section is the transfer timeline. Okay, so you may actually ask what is this transfer timeline? Okay, because Bullions offers option trading, right, different from other brokers in the sense that option, right, is actually a sub account tagged to your stock account. So you will need to actually transfer your shares or stocks into the option sub account before you can start trading options. So this is the respective timeline you should expect when you transfer in between the two accounts. Okay, so just as I mentioned, option price is available free of charge for subscription on Korean's web. Each subscription is available for free of charge for non-professional users and $45 for professional users. At the time of subscription, right, the subscription will actually run for 12 months. Okay, so once you subscribe, the next time you need to renew the subscription will be next year. Okay, so to access the subscription, right, just log into your Korean's web. There will be one tab called Market Data and Rewards. Then you can actually see one is US options. So just subscribe there free of charge. Okay. So listed here is some of the counters and stocks that is available for trading on Poems. Okay. So we typically offer the constituents of S&P 500, the ADR, Nasdaq 100, the main indices. Okay. The constituents of the main indices we offer for options trading. On top of that, right, below here shows a couple of more popular traded ETFs. Okay, so these ETFs are also available for options trading. One thing to take note of is the difference between ETF and normal stocks, right? Is ETF, right? Some of the ETF, for example, your SPY, they expire every day. Okay, so in this way, you can actually think like you can sell your call option every day. Okay, but not advisable to do that. It's not advisable to that. You can actually just sell more than 1 week or 1 month. Don't go and sell every day. I mean, on the broker perspective, we will like to do that because each time you sell a cover call, we'll be earning commissions. But logically speaking, sell it for 1 month, 2 months, or less than that. Okay, don't sell it every day. Okay, so here, the options platform, right? I will not be going through how you opt in to options trading and all. Okay. Later I will be sharing the website link. On the website link, the product page, right? We'll have video guides and also screenshot guides on actually how you can activate options trading. Okay. It's quite comprehensive and quite clear. You can actually just follow a step there. It's a video walkthrough is very fast. Less than 2 minutes the video. So also included in the product page is also teaching you step-by-step guide, video guide on how can you actually transfer your shares and stocks from your stock account into option account. Okay. Okay. That's all for this part. Later, if you got any questions regarding to cover call, I'll be here to answer. You just type your questions in Q&A. Okay. Right now, I'll just hand over the time to YJ, which will share more on the charts for the Magnificent 7. Okay, so he will be sharing on some of the key levels you should look out for, then just you can actually sell a call against that at that key strike price. Okay, over to you now, YJ.
Thank you. Hello, good evening, everyone. Okay, so now I'll go through the Magnificent Seven. Okay, so we will start off with Apple. Okay, so Apple currently, okay, so this TA portion, right, is mainly I will just talk about covered calls, like the point of view, right, will be to at what level you can take profit per se, okay, or where you can put your strike price if you are looking for covered calls. Okay, so if you think of it in another sense, right, it's basically the level where you probably have to be looking for shorts or get out of your long positions. Okay, so Apple Apple basically is in a range bound. I think previous webinars, I mean this Apple has been stuck in this 200 range to 165. Okay, of course recent days it tapped into 200 with rejection to 180. Okay, which got rejected from the previous range, but technically Apple is still in a range bound. Okay, so generally your take profit as of now, right? I mean, it depends on where you enter also lah, okay. But generally, right, price should be stuck at this 200 range again until they can start breaking 200. Okay, I think this is I think I need to draw a bit okay. If price starts to break this 200 level and hold above this 200 with one bullish candle, okay. If you can if you can visualize with one bull, they break already, they create a bullish candle above 200 level, okay, then potentially we can head towards a 216 level, okay. But otherwise, if we are looking at this, maybe now is end of the month, right? Probably like next one month, okay. I mean, we have earnings coming up in early Feb, right? So that might push the price slightly higher first. Okay, but whether they can hold above is another story, okay. Because for any the next leg of this bullish movement, right, we will still need price to hold above 200. Otherwise, right, Apple will still be stuck in this range level from 165 to 200 level. Okay, so if you think of it in terms of take profits and your cover call, right, this 200 level should still be all right for now. Okay, even though yes, it does look very bullish for now, right? But like I say, depends on where's your entry price first. Okay, but generally, if you are in Apple from 180 or even like 170 levels, right? Back then when they came down and you start having positions, 200 take profit, I think is decent enough in terms of the chart. I mean, based on the chart itself as of now. Okay, so the next one I will want to share is Max 7, next one. Okay, Alphabet, Google. Okay, wait, let me just remove everything. Okay, so Google, okay, recently they just broke away from their range area, okay, trying to come back into their all-time high at 150 level. Okay, so looking at this, okay, since now I only at the second stock, I just want to share a bit more also. If let's say you are looking for your cover cost, right? Let's say you want to put your strike price, your strike price should always be above the level, the zone itself. Okay, because I mean, basically the zone is there. It's like a ceiling. Okay, you don't want to go below the ceiling, then obviously the ceiling is not going to help you hold the price below, right? But if you are looking just to take profit, okay, since I mean, yeah, all these levels, right, for cover calls, your strike price is basically like your take profit, right? If you are looking to just put a straight up take profit level, like a limit, right, like a sell limit to just take profit, okay, always put below the level itself. Okay, you understand the difference? Okay, if you are looking just to take profits, right? Okay, you just put below the zone itself. Okay, don't be, I mean, you don't need to be greedy for that $3 more, for example, for this case. The below of the zone maybe is 149. The end of the zone is maybe like a 152. Okay, that's $3. You don't need to be, I mean, it doesn't matter for that $3, I feel, okay, personally. Because it's not always the case where price starts to trade into a ceiling, then they can break the ceiling. Okay, so depends if you are more conservative, right? It's always best that you take your position away out of the market first, then you reevaluate whether price can continue to move higher after breaking the ceiling itself. Okay, so for take profit, straight up take profit is always below the zone. If you want to look for strike prices for your cover call options, right, then it will be above. Okay, because you don't want the price. I mean, the price can come close to it, but you just don't need to break above, right? That's why you are putting your level there, your strike price there. Okay, so back to this Google, the uptrend you see running from 2023. Okay, so one whole year of uptrend last year, very nice. Okay, so price is still continuing. Recently, they just broke their minor range level, trying to attempt back into the previous all-time high at 152 level. Okay, so say real lah, in terms of if you want to put like a covered call, okay, the problem is if you put at least 152, right? I mean, I don't know if 152 you can even put a strike price at 152, okay? But generally, right, with movement coming in like this, right, it's not wise to just straight up go for a cover call at this level first, okay? Because what you potentially, I mean not potentially, what you want to see, right, is for price to reject off this level, okay? Then you look for a cover call on the subsequent move. Okay, because as of now, you see, this whole movement itself, they are still running bullishly. If you are looking to just go for a cover call now, right, to short a cover call, at this point, then you are damn late already, because basically, you see, in November, you can do December, before they break this level, you can actually put above already, right? So at this point, when they start moving higher already, right, very close to this level, it's not wise to do now when they are not showing any form of rejection yet. Okay, so in order to really give your have more probability on your end, right? I think it's wiser to wait for rejection. Okay, once they have rejection, they can tap in, come out, give you one bear candle. Okay, then you look for movement of the cover call above 152. Okay, then this movement might appear. Okay, but otherwise for now, right, it's still bullish, it's still bullish. Okay, they are clearing previous high, lower high. They are now trying to attempt higher high, the previous higher high. Okay, so quite a bit of uncertainty with earnings coming out as well. I think it's best to wait on the side. Okay, but let's say you really want to go in now, really have to go in now. Okay, don't take this 152 lah. Okay, take the level above, which is 165 area. Okay, I think I explained to you all roughly like how you find this psychological level above the extreme or below the extreme. Okay, basically you understand your previous range area, right? How wide is the range area? We just find the range of how wide is it? It's around what, $12, $13. Okay, so 152 you just plus 13 or $12. 12 or $13 are basically lah. Then you will have your next level that is above. Okay, this one price haven't hit lah. This 165 area haven't hit, but then it's just going to be there and get rejected lah. Unless you come closer to it, right? Then suddenly you see a gap out. Gap out. Then the gap out, right? Eventually they reject will come back to the 165 first. Okay, if you understand what I'm trying to say lah. Okay, but for Google now, if you want to take now, 165, 150 area is not good enough. Okay, it's better to go for 165 instead. Okay, then like Yong Heng mentioned, few weeks, 1 month, 2 months is more or less the duration lah. Okay, so for Google is like this. Okay, then we Google, Amazon. Sorry, I didn't. Okay, so anyway, Amazon. Amazon. Let's take a look. Okay, Amazon also quite interesting. Okay, recently it's not really recently. Okay, in November, December, they broke their previous range area. Okay, a very huge area that they formed for quite a while. Price starts to break higher. Okay, starts to break higher. We know that price continue to stay above. Okay, this 140, 143 area. Price continue to tap in, supported, holding it. Okay, so now where we are looking at next, where Amazon might potentially be running to is to 170. Okay, the next level. So technically it's just this level. Otherwise, the next one will be at 180, 190 area. Okay, so it's the same story lah. I mean, basically, even if you do cover call, you just do your normal equities trading, right? Its price will always move level to level. Okay, so but the option is, one thing is there's time involved in it lah, right? So you need to pinpoint for yourself, like, will we be able to go above 170 within this month or 2 months? Okay, but otherwise, right, generally, I think with the price moving like this, they should be going to 170. Okay, so same thing, if you are looking for your take profit, it's probably going to be a 167. Okay, safer to put here, it's more conservative. But if you are looking for cover call, it's best to put above 172. Okay, 172. Okay, the Q&A, all those, right, later Yong Heng will answer lah. Okay, because generally in this TA portion that I'm going to do, right, it's just purely just on covered calls only. Okay, it's just covered call. I mean, there's a lot of strategy that you can put in place with covered calls. Okay, but in terms of TA that I'm doing now is I'm just giving you the ceiling. Okay, the ceiling you just need to know. I mean, not you just need to know. I mean, the ceiling is there. Okay, so it's for your take profit level or your strike price for your covered calls. Okay, but later I will let Yong Heng explain more on other strategies that you can complement with covered calls itself. Okay, so the fourth one, Meta. Let's take a look. Wow, Meta very bullish. Wow, Meta non-stop leh. You see, non-stop, non-stop. This one really is non-stop. Okay, then I mean, you see, Orions now got you can buy calls also, right? So doesn't matter ma, you bullish, right? Technically you can still go for options to take the bullish run, okay. But for I mean your take profit, if I mean I'm pretty sure a lot of you, right? Let's say you have Meta, your take profit is more or less you already get hit already lah. Unless you're going to hold it there for life, hold it there for life. The next level that you probably might be interested in, right, is 440. Okay, 440, 445 area. Wait, let me, sorry, use the wrong lines. Okay, you might be interested in 440, 445 area, which is around here lah. Okay. Same thing, why I pinpoint this area is basically the range between the previous, I mean the range, okay, how do I, okay, the difference in price in the range, okay, in previous ranges. It's like an average one, you just go and see, we have a range here. I give you all example, you have a range here, you have a range here. All these range basically, right, the difference between these two, right, is almost the same one, these three, okay, $50, $50. It's always there one, almost one, $50. So from here, I just plus a $40, $50. Then you know your next psychological level, the next ceiling. Okay, because price will always run level to level. Level to level meaning they will run from one range to another range. Okay, so Meta now, I mean, I wouldn't short lah. I mean, there's no short in it lah. There's no short. Okay, to be very frank, there's no short. Your next TP that you're looking at, like I say, 145, 144. Sorry, 140, 145. Okay, so if you are looking in terms of cover calls, let's say you already got Meta, you want to hold a position, you want to earn some premium from it. Okay, basically you just earning premiums. Okay, you can put above at 150. Okay, for this period until the earnings, I think it should I think it should be quite alright for a 150 cover call, right? Because basically, I mean, yes, now all-time high movement itself. Yes, they are very bullish into this zone. Okay, but the thing is, right, for now, I think it's quite overstretched, early part of the year as well. See whether got any rejection, whether price can hold itself above. Okay, if can hold above, then wow, means they might want another run again. Okay, but if they haven't hold, now this is just testing only. They are just trying to go into it to see if price can potentially break above. So these few weeks is very delicate lah. It's basically sitting there already. Okay, so I think for now the next level that we are looking at 140, 145. Okay, next one, Tesla. Okay, Tesla basically range bound. Nothing to see. It's range bound, but okay, range bound good. Basically, you see, cover call is just for your neutral movement. I mean, if your outlook is neutral or bearish, right? So if this movement like that, I wouldn't. I mean, a lot of people will tell me, oh yeah, Tesla now bearish, why? Because 2 weeks of bearishness. But it's not. It's basically just neutral because it's stuck in the range area. Okay, it's just stuck here. Come here, okay lah. I don't know whether they will rebound 200 lah, but high chance is they will lah. Okay, high chance. So anything your cover call even if you're looking for short term one, right? This 230 it will potentially become a resistance for now, a supply level for now. Okay, if price were to tap down and reject, right? This 230 will probably be a supply level that price get rejected first. Okay, because we are forming series of lower high, lower low area. You just imagine this guy as a channel itself lah. Okay, this whole down move, not down move lah, it's just basically for these few weeks they have a minor correction, right? So this area here, you will see price getting rejected. Okay, until they can start printing a new higher high, which is above 265 level. Okay, so for Tesla 235, I think it's quite good. It's quite alright. If you want to be damn safe, this 1-2 month damn safe one. 280 should be damn safe I feel unless these earnings, okay, a few days later, these earnings are surprise like really surprise I don't know how surprised it will be okay. But considering the movement like this, right, I don't think there's any fall movement. I mean, like any movement from earlier portion. Okay, they might have some rejection, 235, otherwise subsequently 280 should be quite alright. Okay, then after that, NVIDIA. Okay, last two already. NVIDIA, you see, okay, same story. Range bound broke all-time high, $600. Pre-market 600, 601. How to pinpoint your level now? Right, Chong and Chong, this guy keep going higher and higher. Okay, but never mind. We just find the next area that they potentially might stop first. Okay, so before this whole movement, this whole bullish movement, right, itself, NVIDIA was trading in a $100 range area. Okay, the price difference $100, 400 to 500. Okay, then we know that this whole bull move itself ran from 500 to 600. Okay, so now the question is, will they continue this movement? I don't know. I don't know. Okay, but what what you need to see before you can pinpoint what they want to do, right? Is you need to wait for a bearish candle to appear, very hard for me to pinpoint already because this whole bull movement itself, right? They ran 100. Logically, the next one I will tell you is 700 right? Like I tell you, it's 100, 100, 100. If their range is 100, then it's always 100, 100, 100. Okay, so now at 600, but you cannot pinpoint anything because they have been running already until they start to show you bearish candle. Okay, if they were to close bearish, subsequent price starts to run downwards again, right? Okay, then you know for a fact that NVIDIA might start a new range over here. Okay, but for now there's no confirmation lah. I only can tell you that okay, they already ran 100 off their range level, their previous range. So now they will find a place to basically just stop and accumulate again lah. Okay, so for now NVIDIA, your next profit target say real lah. I don't know how you want to take a profit for NVIDIA already lah. Because it has been running and running. 600 say real, I would say is a very good area for take profit. Okay, also then depends on where you go. If you go at 400, 600 is really very good. Even you go at 500, 600 also considered not bad, right? But if you go at 600, let's say today you go in let's say you today go in 600, you want to find top TP okay, the next level I will look at is 700. Okay, so basically NVIDIA now for this phase only okay, for now you can take it as every run they run right, or the next area that they start a range area, okay, it's probably be $100 difference already in the price. Okay, this is on daily, this is on daily, okay, swing. But if you want to talk about intraday, then no lah. Intraday obviously it won't be $100. Okay, you see the candles is actually very small. Okay, so at most it's getting $10, $12 kind of range. Okay, but for now I think NVIDIA very tough to play. Okay, very very tough. I would rather wait for some rejection to be seen first before doing something. Okay, even if normal equities trading, there's nothing for you to really touch already in NVIDIA. Okay, where were you like what 2023 January? Okay, or even wait until June can go or not? You also haven't go. Wait until October, give you rejection made nicely at the zone also never. You cannot be wait until 600 then you want to try to trade right from here. I don't think it's wise lah. Okay, so personally I think the NVIDIA for now we KIV. There's nothing. I don't want to give you like nonsense numbers and all lah, but there's nothing you can do now lah for NVIDIA. Okay, if you're in a position, then good, congrats. Okay, 600, same real, quite a good profit already. We can leave some for 700, maybe even more. Okay, but generally for now, NVIDIA, there's nothing to do. Okay, then the last one will be Microsoft. Okay, wow, you see all the tech giant now run 400, all time high also, 400. How? Okay, I'm just going to draw the same thing again. It's always the same thing. I just going to draw for you. Because okay if you slowly watch my webinar, right? Actually, my TA all the same story one. Okay, I find a range, I find level that they can reject or cannot reject. I find where they can go to next. That's all. Okay, so this one Microsoft easy 360, 380, 360, 385. Okay, price broke recently. Price held above all-time high again 400. Where can they go next? Okay, $20. 400 is general. Basically this 400 area, right, is their first level already. Okay, 400. Psychological level, 400 round numbers also will be affecting the price also. Okay, so now price sitting over here, I cannot guarantee tell you that price is going to be bullish above this 400 already. Not yet. Okay, you need to see how they close today and tomorrow at least. Because for now they only created a new support above 380. But 400 is basically you have no resistance, you have no supply, you have no support, you have no demand, you have nothing over here. It's basically just numbers for now. Okay, so if you are looking for same thing, if you are looking for TP 400, I think is quite all right. Okay, otherwise you plus another $20, 420. Okay, so same thing for Microsoft. If you recognize the picture, right, it's basically $20, $20, $20 run. Okay, it's the same. You see, I put here, here $20. Here, generally also around there, 20 plus. Okay, it's around the range itself. So you just need to take note that, okay, for this counter itself, each area that they run, the level to level is $20. Okay, you compute your risk, you go and manage it. I think for now, Microsoft, Nvidia, all these are all the all-time high out of it already, right? Already form support and out of it, I think just let it go first, just wait first. If you are in a position, then good, happy for you. Okay, if you're not in a position, then have to wait. I think you really have to wait. Even if you want to cover call, can it's depend on whether you want your counters to be a sign or to be exercised or what. Okay, because if you are fine with now already in profit and you're fine to earn that a bit more, okay, then you are okay that, okay, never mind, next time I can buy again. Since now price so high already, all time high already. Right, you release it now, wait for price come down, can buy, I think it's not too bad lah. Okay, but don't tell me that, wow, what if price don't come down? No lah, price will come down, but it's just how low. Okay, price will come down, that's a fact, price will come down, it's just how low they will come down. They will come down, but how low? Okay, they might not see levels like $100, this kind anymore, might not lah, okay. But like for example, like I just give you an example, Microsoft 400 will come down to 350, 360 again, yeah, probably will lah. Okay, so at this price, if you, let's say you take at 400, price come back 350, 360, right? You take profits before already, and now you go into position again, right? Then you basically it's fine, right? It's just that maybe your average price not as good already. Because maybe last time you buy $100 or even less than $100. Okay, but last time, I also say last time, I mean in market cannot talk about last time already. Okay. So yeah lah, depends on how you look at it. I think your profits is always good to take. Then with that, I will end off this TA portion. Okay, I will do promo first. Or you want to share Q&A? Okay, so yeah, I end off the TA portion. Okay, if you have any questions for TA, Poyos TA Telegram, okay, I'm still there. For this webinar, I will hand it over to Yong Heng to explain more on options itself. Thank you.
Okay, thank you. Okay, I see some Q&A, okay, and also some chats. So I appreciate if those questions on the chat, right, can be put on the Q&A so that we can actually answer them systematically on it. Okay, I prefer to hold my webinar as a two-way conversation. So just ask me any questions relating to options. We will be happy to answer. Okay, so before I go into the Q&A, right, I cannot stress enough the point that, like just now when YJ mentioned, the max 7 is already this high. Okay, and if we are already in a position since like 10 years ago, you are sitting on a pile of profits, just take profit off the table. It doesn't hurt to take profits. So next time when the share comes down, right, buy it again and do cover call again. Okay, so use cover call as an exit strategy. Okay, if you're sitting on pile of profits, right, just take it off the table. You don't want to be caught in a position that like, oh, I'm sitting on $10,000 profit. Market tanks, my 50% profit is wiped out. You'll be sorry in that. Okay. So I'll be going through, probably I'll go through the questions that I have on the chat first. Okay, so one of the questions is can poems do rolling of the contract? So if you're not aware, what does rolling means? Rolling means that closing the option contract and reopening another one. So this is a simultaneous single trade. Okay, so I open and close in one single order. So this is what I mean by rolling. Okay, so apologies, Boyens currently don't support that. So how, in the sense that how can you roll your option positions? Okay, so you will have to close the position first, then reopen a new one. That's the only way you can roll on Boyens right now. We are enhancing the features, but this is it's not available yet. Okay. So another question is what is the advantage of buying a call option? Okay, because this webinar is actually concentrated on focus on cover cost, I will not be touching much on call options, buying a call options. Okay, but in a nutshell, what's the difference between buying a call options and shorting a call options? Okay, buying a call options, you're bullish, you want the stocks to go up. Okay, there's many different ways you can buy a call option. The expiry date, long dated, is called LEAPS. Okay, Short dated, you are just playing on the short-term horizon. Okay, so buying a call option, how does it differs from selling a call option? Buying a call option, the time value work against you. With each passing day, right, your call option gets less and less valuable. But on the other hand, short call, your options, right, also get less and less valuable. But you're on the short side, you're able to buy back at a lower premium. So that's the difference. Okay. In the future we'll be covering a lot more strategies. Your straddle, your lips, and also your protective puts. We can hold webinars against for that. Just let us know what are the strategies that are interested to hear. Okay. So for now, that's just for about cover cost. We will be holding one for cover cost probably. Okay. And also for not for cover call, for long call. Okay. So long call, another advantage is the leverage effect. So you are actually paying much less when you buy a call option than you were to buy the call buy the underlying shares outright. Okay. So yeah. So on the Q&A, so there's a question is can you demonstrate how to sell a cover call? Okay. I don't have the trading platform with me here to show, but selling a call options on Bones is actually quite easy. First, of course, you have to transfer the shares into your option account first. The shares have to be in your option account first before you short the call. Okay, but not to worry, even if you transfer the shares inside or you have not, and the share is not reflected in the option sub account, then when you were to sell a call option, right, it will check against the risk management will actually check against if you have underlying shares in your account. If you do not, the system will actually reject the order as a naked call, because right now we don't offer naked call yet, only covered call for now. Okay, so how do you sell a covered call in Poems? First, you transfer the shares into your option account. Once it's inside, you sell a call. Just go to the whichever stocks that you want to sell, click on options, then you will show up the option chain, click on the specific expiration date, and also the strike price. It will also show the bid and ask. The bid and ask is actually the premium you will get from selling the cover call. But do take note, because option there's a multiplier of 100. So whatever bid and ask shown there, right, you multiply by 100. That's the actual premium that you will receive. Not to worry, not to be alarmed that the bid and ask is showing 0.2 versus 0.3. I'm only getting 20 cents, 30 cents when I sell the option. Then why would I want to sell? That's not okay. 0.2 versus 0.3. That's the bid and ask. You multiply by 100, right? You will be getting a premium of $20 and $30 in between. Okay, that's the premium you'll be getting instead of the 20 cents and 30 cents. Okay, so yeah, and also is it considered a vertical call, covered call? Okay, vertical call is not. So vertical call, it can be your credit spreads and your debit spreads using call options. Okay, so it entails simultaneously buying a call and selling a call. I won't be going too much into detail what's the spreads. Okay, but that's just the nutshell. What is a vertical call? Cover call is actually very simple. It's just combining a short call with your underlying shares. That's all. Okay, second question is how do you decide to take profit price? Okay, the price ceilings is so random. Okay, I think this one probably I need YJ to elaborate further.
Yeah, okay. I think the setting of the price ceiling, right? Generally, if we are talking about, like, for example, I'm not sure if you remember the chart on Microsoft and maybe Nvidia, right? They are all at an all-time high already. Okay, so the next level that you can actually pinpoint, right, is based on psychological level, and that's about it lah. Okay, you only have psychological level based on the numbers itself lah. Okay, on TA, of course maybe you go and crunch number based on fundamentals and all, but I mean, if we are just purely looking at chart alone, right? The psychological level, usually they are round numbers, okay? Or you look at the previous ranges that they broke away from, what's the price difference between the low and the high, okay? Because price always, it will look very random if it's the first time you are looking at how I chart, basically, right? I'm not sure if you have seen like the other TA webinars as well, okay? But basically it's based on supply and demand. I'm looking for range levels, okay? With the range, then I know whether price will get rallied or drop, right? Then with that, I will pinpoint how far the price will move from there. Okay. Another way, if you want to have more, in a way, assurance, right? Like you can go and read out on Elliott wave theory. Okay. They give you some wave, they give you some numbers, then you can use FIBO to count the numbers itself, okay, on the chart. You can go ahead and do that. But for me, I just use my supply and demand. I look at range, I give you the numbers. Because it's all-time high, I cannot really pinpoint, tell you, look at the left side, there's nothing on the left. So all these numbers are based on psychological level, round numbers, and also how wide the previous ranges were before they broke away. Okay, thank you.
Okay, just to be on with YJ's whatever YJ mentioned just now, right? Because right now everything is so high already. It's at the record high, nothing on the left. Okay. So what should you be taking account when you were to sell cover call? Okay. For additional sharing, right? Selling cover call, right? The amount of premium you get also dictates on first the expiration date, the underlying share, and also the strike price that you choose. Okay. Expiration date, far dated contracts will worth more. So if you were to sell a 1 month contract versus a 2 month contract, right, you will be getting a premium more when you sell a 2 months contract versus the 1 month contract. Okay, but what's the difference? Okay, the difference will be coming in the form of a time value, the time decay. The 1 month contract, right, will actually decay much faster than the 2 month contract. As just now when I showed the chart, the time decay chart. Okay, you can see the 1 month expiration date, the time decay actually falls much faster. So for person that's holding on to a 1 month contract, right, your option contract will decay much faster. You can buy back at a lower price much earlier, much faster. Okay. The other one is the underlying share. Okay. The underlying share, right? The rule of the thumb is an option contract will be more valuable if the underlying share is more volatile. Okay. That's the rule of the thumb. So whatever we mentioned here today, Magnificent 7, those are very volatile stocks. You should expect to get a higher premium as compared to when you were selling cover call for Coke. Coke doesn't move. Okay, doesn't move. So you should expect when you sell cover calls for Magnificent 7 stocks, you are getting a higher premium. Okay, but there's a caveat to this. Okay, with a more volatile stocks, the risk of you getting assigned is much higher. So this leads me to my third point, the strike price that you should be choosing. Okay, it totally depends on you. I'm not able to give you like, oh, you should be selling at this, selling at that. Just now YJ share the key levels that you should be looking at. Okay, that's just a reference. Okay, it's not an exact point that you should be selling at. It depends on how much premium you want to get and what's your risk appetite. If you are very risk seeking, meaning you are able to accommodate more risk, sell the strike price at a much lower strike price. But the risk of it is your underlying shares get assigned, the risk of your underlying share get assigned is much higher. But then on the upside is you're getting more premium for it. Okay. The reverse is also true. If you don't want your shares to get assigned, but you also want to generate income from cover call, right? Sell at a much higher strike price. But you'll be getting a much lower premium. Okay. So that's just what I want to share. 3 things: expiration date, underlying shares, and also strike price. Okay. The second part is underlying shares. Okay. Today we shared on Magnificent 7 shares, but the cover call strategy doesn't only limit to these 7 shares. You can sell cover calls on any shares that you're holding. Any shares that you're holding. If it's sitting in your account and you don't plan on selling them, you are just a buy and hold guy, transfer it to the option account, sell cover call against that. Okay. You can just do that. Okay, so now is the third question. We need to transfer 100 shares from account to option account. Yes, that is correct. Option contracts cover 100 shares. So if you want to sell cover calls, you cannot just transfer 1 share. You transfer 1 share, you sell a cover call, the order will be rejected with nickel call because each option contract covers for 100 shares. You will need to transfer at least 100 shares to sell a cover call. You want to sell 2, transfer 200, sell 3, 300, and so on. Okay. Okay. The other question is, what do you mean by 2.8 per order? Okay. Just now the commission structure I mentioned is 0.8 per contract, minimum 2.8 per order. Okay. To better illustrate this is minimum order. Once you send in an order, you'll be charged at least 2.88. Okay. The number of done contracts, right, is 0.8 per contract. Let's say you send in for 10, quantity 10. Okay. The commission you'll be charged is 8.8. $8.80. Okay, that's the meaning of per order. But if you were to send in below 4 contracts, you'll be charged 2.88. That's just a minimum per order, you'll be charged 2.88. If anything, you'll be charged based on the contract basis. I hope I illustrate that well. Any better illustration? I think that's okay. Okay. There's one question is, can sell options on SGX shares? No. Okay. Currently, PoEMS only offers options for US stocks. Okay. You cannot sell any options on SGX shares. And also, whatever options you are offering, right, is all exchange traded. SGX doesn't offer plain vanilla stock options. They only offer commodities, index, all those. SGX doesn't have stock options. Okay. So as far as I know, there's the main two market that is heavily involved in stock option is Hong Kong and US. These two are the biggest one. The biggest option market is in the world is actually India. Okay, but India, right? Part of the contracts, the option contracts is on actually your indices, your commodities, all those. Okay. Just a fun fact. Options, right, it's not only on stocks. Okay. Options, right, can be on a lot of other things. Your commodities, your futures, and also your weather. There's OTC traded over the counter, like the weather, temperature, all those, whatever that can be traded on options, right? Whatever options can be written on, right? It can be written on. Okay. Stock is just one of them. Option is just a derivatives. That means it derives the value from the underlying shares. Okay. Underlying securities. It can be on a lot of things. Okay. Okay, one question is if the shares get caught away when it's in the money, PoEMS allow cash secure put. Okay, currently we don't allow cash secure put. Okay, right now we only allow cover call, long call, and long put. These are the three options strategies we are only offering. Any other strategies that you want to combine to form another strategies, you have to be within these three. Okay, for example, your shredder, just combine a long call and a long put. Okay, that's your shredder. So currently we don't offer cash secure put yet. We are in the midst of developing it. Hope to offer it soon. How much cash will be frozen from the covered call sales? When you sell a covered call, there's no margin requirement. Okay, because a covered call, you are covered with your shares. As long as the shares is in your account, you sell a covered call, there's no margin requirement for it because you already put up your shares to be covered for the options. So there's no margin requirement for covered call. Okay. Do you need to choose covered call or just call in PoEMS platform when you want to sell a covered call? Do you choose to covered call? If I'm understanding your question correct, Belinda, you are referring to, do I need to choose the specific strategy called covered call, then I sell a covered call? No. Okay. So just now when I mentioned, right, just transfer the shares into your option account, just sell a call against that. Okay. You don't have to choose any tick box or what, this covered call is meant to be covered. No. Okay. The system is smart enough to automatically read that you are selling covered call against whatever shares you're holding. Okay, if this question is about commissions. Means if you buy one long contract, sell one new. Yes, correct, Jeffrey. When the order is actually long one contract, you'll be charged 2.88. You sell one is 2.8 also. The commission structure that PoEMS have, right, is actually quite similar to whatever fintech is offering. Okay, there will be a minimum per order, and also they will be charging by per contract also, whichever is higher. Okay, probably I should just illustrate that. How the commission structure is charged is 2.88 minimum per order or 0.8 per contract, whichever is higher. Okay. Okay, I don't see any more questions. Probably is 9:08 now. Market is opening in around 1.5 hours. Probably we'll just stay on for another 5 minutes. Yeah. Then you want to run through the commission? Promotion? Promotion? You want to run through promotion? Okay. Okay, hold on.
Continue, sir. Okay, so since y'all still have any other questions, I can just throw into the Q&A box. Okay, but for now, let me share with you some of the promotions and also our community on B3 Mobile. Okay, so this community, basically we share news, share charts, share. I think Zain shares some of his articles, okay, the technical reports on the poems. So we have TA groups, we have ETF, we have Singapore stock trading, we have bonds, earnings rate, all these are okay. So all these will be on options. We have options also, okay. Yes. So with all these groups, right, on Mobile Tree is basically like a community. You can go in and ask questions, we can talk, we can discuss on anything as long as it's market related. Not market related, I don't know whether the people will reply, but yeah, it's basically a community we can go in and just talk around, right? Like talk to people basically in the group itself. Okay, so next, global market Telegram group. Okay, this one every day 5 a.m. Okay, for now 5 a.m. lah. Okay, once market closes, we will send updates on what's happening in the US market. Then is there any interesting news on like the other markets as well? Okay, so these will be updated almost every day 5 a.m. Okay, then also the TA Telegram group, Williams TA. Okay, Zain is running his webinar every Monday every Monday lah, basically weekly. Okay, today I took his slot lah, basically. Okay, I talked to him. I say, hey bro, you take a break. Let me do these options, right? But otherwise, he will be doing his webinar every Monday. Okay, so if you are interested in technical analysis, jump into his webinar. Okay, in the Telegram group, you can talk to us as well. We are there almost. I think we are quite active there lah. Okay, so Poems account, if you haven't opened Poems account, kindly, you can open just scanning by the QR code. Okay, and also now we have options trading, then a few other new stuff that is going to come up very soon. Okay, we will see how it goes. But for now, if you are not a Poems account holder, you can sign up with us as well. Okay, then I think the last slide, yes, the survey. Okay, appreciate if you can help us fill up this survey form. Just I think it's a short one. Okay, just whether the webinar helps you in any way. Okay, what are you interested to look forward to? Okay, this survey is for the whole global, for our 9 dash team. Okay, so we come up with webinars for macro, for TA, for options now, anything basically. This survey form, right, you can write down like what are you interested for us to speak up, speak about more, okay, to discuss more on. Then we will see whether we can cater for that. Okay, so this survey is not just, at this point, there's one portion that asks you what you want to look forward to, right? It's not just options solely on options, okay. But this webinar, if you can give us like your feedback, whether is there anything that we can improve on, okay, or some stuff that we can change, you can let us know in the survey as well. Okay, so I see there's a few more questions. I pass over the time to Yong Hing.
Okay, I think some of the questions is regarding whether this video will be posted on YouTube or etc. And also the guided video on how to transfer shares and profit. Okay, as a follow-up after this webinar, we will be sending out EDMs. Okay, what the EDM will include is the videos. Okay, the videos, guided videos on how do you transfer shares, how do you activate options, and so on and so forth. How to play straight. Yeah, how to play straight. And also we will include the product page. The product page is actually done out quite comprehensively. You can find out whatever details you want there. It also includes a tab called strategies. Whatever strategies that Poems offers right now is there's a short write-up there. Okay. And also because this webinar is about cover call, we also have an article written on cover call. Okay. We will send that including in the EDM as well. Okay. So yeah. Okay. I have one very interesting question is if I were to transfer the shares into option sub account. Okay. And let's say I want to sell the shares. How can I do that? Okay. Okay. So once you transfer the shares into your option account, technically the shares is not in your stock account. You can't liquidate from there. Okay. That's for now. But what we can actually support, how can we actually support is if you are in that position, right? You can call up the night desk. We can guide you along. We can actually adjust the holding accordingly. Then you can go ahead and sell it on your stocks account. Okay. But one thing to note is if you have the intention to actually sell the shares that is in your option account, right? But then it's not in time because of the transfer timeline and all. Okay. I know the transfer timeline is a bit restrictive for now. Okay. We are trying our best to actually support this as seamless as possible by calling night desk, and we adjust the holdings accordingly. Give us a call. We will do some checks. We have to ensure that there is no short position that is attached. So technically, you have to close off a cover call, okay? Then we can actually adjust accordingly your holdings. Then you can sell it away on your stock account, okay? Yeah. Any difference to the dividend collected when buyer exercise before exercise date? I am not okay. I think I understand this question if I'm not wrong. Okay, so the question is about when a buyer were to exercise, okay, the shares that he actually exercise before the dividend or after the dividend, is there a difference in whatever that you actually receive? Okay. For options wise, right? For dividend, right? It will not have any impact. I'm talking about those not special dividend, your quarterly dividend. Okay. The option, right? The prices will actually how do I say adjust as per how the dividend is. Similar to how stocks currently is. When there's a dividend payout, the stock will actually decrease in price because this is a cash out of the company. Okay. If we are talking about special dividend, the company announced a special dividend, okay, the option contract will be adjusted accordingly. For example, I'm just quoting an example, okay, Apple announced a special dividend of $5, okay. If you're holding on to an Apple contract, whatever strike price you are holding on to, it will decrease by $5, okay. This one is adjusted automatically by the OCC. The OCC is the exchange that actually clears all the option contracts and also adjusts the option contract accordingly to how corporate action handles. Okay. Yeah, so that's it. Also we have a tab on the product page, corporate actions. So corporate actions affects your option contracts differently as compared to stocks. Give that a read, okay? It's quite informative. Okay, so that one will actually elaborate how your option contracts adjust as per the corporate action. Okay, do take note, these option contracts adjustment, right? Poems don't adjust the contracts. It's all adjusted by the OCC, by the exchange. Okay, they just adjust, they adjust, give it to a clearinghouse, we just take it whatever it is. Okay, but do note that whatever adjustment made, right, is all fair market value one. The adjustment won't be like at the benefit or disadvantage of whichever player is actually in the market. Okay, let me just go through. We still have time, right? Sorry, give me some time because there's quite a lot of questions. Let me just run through the more interesting ones. Sorry, I didn't know I was muted. Okay, I talked for so long, I didn't know I was muted. Okay, cover call. Okay, so there was this question about buyback of a cover call. Okay, when you sell a call option contract, you want to buy it back. Okay, whatever premium that you have paid back, right, it's not dictated by Boris or whatever. It's dictated by whatever how much the call option contract is trading at that particular point in time. Okay, so that it will actually show, the PNS will actually show whatever price you need to buy back the option contract. Let's say it works in your favor. You sell a call option contract, next day you want to buy back at a lower price, it will be stated at the bid and ask, that premium. Okay. Yeah. Actually, I think that's about it. Okay. Yeah. So just now, as I mentioned, do fill up the survey form. Okay. Let us know what can be improved and what more do you want to hear. Okay. We will also be coming out a series. In the future, we'll coming out a few more series of option strategies webinar, and also whatnot. And also as a follow-up, as just now I mentioned, there will be EDN send. Okay, the EDN will cover whatever you need to know about cover costs. Okay, that's all I have. YG.
Yeah, I think with that, we will end off today's webinar. Okay. The next webinar we will have is probably end of February. Okay. So that one, we will probably be more on macros. Okay. So also I think going back to last year's, I'm not sure how many of you actually attended for TA, right? So if there's a demand for it, like TA workshop or webinar again, then we might be looking to do that as well. Okay, but for now, please help us with the survey. At least we know like what kind of numbers we are looking at, what kind of content can we come up with. All right. Otherwise, we will just be doing whatever we feel like lah. Okay. Okay. So for now, I think that's all. Okay. If you have any other questions, you can give us a call, drop us an email. Poem's TA webinar, Telegram group, Global Markets Telegram group. Okay. Anywhere you can reach us. We will try our best to reply to every questions you have.
One last thing.
Okay.
Please do join the option community. Okay. On Mobile Tree, bonus Mobile Tree. Okay. In that community, we'll be sharing market updates. So sometimes we'll be sharing trades idea. Okay. Whatever, like for example, a short call, etc. Okay. Yeah, that's all.
Okay.
Thank you, everybody.
Okay, thank
Bye.
you.
Good night. Stay safe.
Stay safe. Stay safe. Bye bye.